Hey, what's up, ICT traders? Good to see you back here. Imagine waking up every day and all you have to do is to look at your charts and see if there are trades opportunities you want to be part of. All right. So I just finished a live session with my community guys, and we are expecting to take this trade, guys. You know, sometimes trading is more than just making money. All right. I will soon be in this trade as soon as it hits this entry level. I want to be in this trade, but my stop loss was supposed to be above here, but I'm putting it here because I am seeing this particular fair value gap and this area as an area that I don't want price to go above. As soon as price goes above here, I don't want to do business in that area. I will just close it up. It's just two things. It's either you make money or you don't make money in the market. I'll go into the analysis of everything, but I am expecting price to take me in from here, basically from my trade locker. So I've already put my pending order, but for the purpose of recording, I don't want to get distracted. I will be showing you everything, and I will show you the analysis we did this morning and how you can control yourself and manage yourself as you take trades in the forex market. Guys, trading is so amazing, and you don't have to always win to make profit in the market. All you need is to make percentage of your profit. If you are always struggling with blowing account from here to there, your problem is not necessarily about strategy. It's not necessarily about a concept. Most of the time, our problems is related to our capital in the market. I was sitting down and I was doing analysis, guys. Trust me, if you can follow this analysis, you will see the sense in it. It's very, very rational. Now, if I have a 100K account, let's say this is my personal funds, and I'm targeting just 4% of this account every week. 4% is going to be 4K every week. All right, every week. In 1 month, I'm going to have how much? If you target 4 times 4, it's going to be 16. That's 16K. Now, this may look small, but if you are an investor, you will know that I'm not just saying it for the talk, or I'm not just saying it for making content. Trading is more than just what you see on social media. You need to be very disciplined with your funds, and it's something that takes time to build. It's called equity curve. So you're not turning 100K to 15 million in 1 week or 1 month. No. That is not trading. That is gambling. So you have to bring a reason, a strong reason behind the kind of trades you are taking and why you are taking the trade. All right. So if you are doing that for $100 account, all right, you are doing that for $100 account, that's going to be $4 per week. You will now realize that your problem is not necessarily the problem of strategy. The problem is first the capital. And then secondly, what else? Your psychology. So if you cannot manage $100 account and you really want to make money, then go for a prop firm. Look for a big money that you can pass the challenge. At least the skills are good and you can pass the challenge. That is why I've recommended Fonda Pro for you guys. This is Fonda Pro, guys. I'm going to place the link to their website in the description of this video. You're going to get an account with them. Fonda Pro is one of the amazing prop firms out there. You can check them out and you can get an account with them if you want to get an account, so you can trade bigger money and see. Just try new things, guys. Don't be scared of making money in the market. I'm already in the trade right now. I am expecting price to respect this area. I'm expecting price to respect this area. Don't worry, I will show you everything I did. The reason why I'm even in the trade first before anything else. All right. So I want you to believe in yourself. Believe that you can do this and be strict and disciplined about what it takes to become a profitable trader. All right. So 4% of your money is what you should be targeting. That's all. 4% is what you should be targeting. So quickly, let's do a recap on the analysis I did with my community guys before even thinking of taking this particular trade. I started by checking on DXY. Of course, if you are trading anything, the dollar or European currencies, that is GBP or Euro, you should do a top-down analysis on DXY first, because DXY is basically the indices for the United States dollar. What that means is that anything you see DXY doing, that is exactly what the United States economy is doing. So I'll go to the 4-hour time frame and I will start from there to show you everything that I was looking at before I even thought of taking that trade. As an intraday trader, there are some things that you cannot avoid. So last week, Friday, I told them that I don't need too much data to take trades. All I need is boom. I was seeing draw on liquidity. And what is price doing now? Price is bullish. Don't forget, price is bullish. Break of structure, all this area. But then on Friday, I saw price did something here. Price was printing this particular candle. And trust me, guys, price behavior is fractal in nature. What that means is that before the ultimate movement, which is here, the draw on liquidity, we are expected to see some fragmental movement of price. I hope that is a correct English anyway. I like to see a chunky movement that will happen in the lower time frame, in the lower time frame, as it keeps unfolding until I reach the final movement that is expected of price. All right. So that was the reason I was taking the trade majorly. So when I saw this, I saw that price had this one before today. That was on Friday. I saw this guy. Do you know what a volume imbalance is? Actually, I got this from ICT. Everything most of the things I'm teaching you is from ICT. Don't forget to check ICT on his YouTube channel. He's an amazing teacher. He has everything right there. So you can check ICT's videos. Most of them are there, and you can get from first-hand detail there. So right here, I saw volume imbalance. What is volume imbalance in simple term? Do you know that price is supposed to behave this way? Let me show you an ideal price action. Can you see these two candlesticks? This one and this one. If you look closely, you're going to see that there is no gap in between the movement between this one and this one. So anytime we see the gap between the bodies of the candle, not the wick, the body, like the way you can see here, this one. Let me show you. This one. Can you see it? So when you see that, only the wicks are interacting with each other. This wick and this wick have now interacted. That if I put a line here, you will see that this wick and this wick are connected. They are interacting. So that is the volume imbalance. Price normally comes back to fill it up. And that was exactly what I saw here. So I was watching for price to come and fill this volume imbalance since on Friday, before I will finally have my price going up to this draw on liquidity, because of course that is the driver of the market. So I now came down to the 4-hour time frame today, still doing the same thing, and I said, okay, there is a shift in market structure here. Market structure shift, guys, right here. I said, okay, that was an indication that price is pushing downward to the volume imbalance I saw on the daily time frame. But then price push lower into this area. If you are doing supply and demand, or you can call it a bullish order block, whichever one you want to call it, that area is a bullish order block. And trust me, guys, price have traded into at least the main threshold, half of it, half of this area. So what does that mean? It simply means that I am expecting price to go back up. At least if price should go back up, even if I'm considering a bearish movement, I have done my premium and discount. Where can I see a level in premium? I am seeing this guy. Can you see? What do we call it? Is that a bearish breaker or bearish mitigation block? Remember your mitigation block, price, boom, up, boom, down. Okay, here, push up again, crashing down. So if that is what price is doing, then look at this. I was expecting price to come back into this area. Remember I told you that price is fractal in nature. So the highest level price could go to is here. All right, that area. And I don't want to leave price to do this movement without me in the market. This is the London session and I want to trade if I see a setup. So I decided to go to the 15-minute time frame because price is behaving in fractal. All right, so on the 15-minute time frame, I wanted price to respect that area. I saw this one. You remember that same area? Do you remember something called new week opening gap that ICT taught? New week opening gap is basically when the new week starts and price, boom, shoots or jumps from here to here. Price doesn't leave it unfilled. So price will not leave this place untraded. So I'm expecting price to come back into the new week opening gap. And that will mean that price will come back to this line I've put on the 15 minutes or on the 4 hour. All right. So the next thing I did was the 5 minute. Can I see a shift in market structure inside the bullish order block that I saw on the 4 hour time frame, guys? I'm not just doing it haphazardly. I know what I'm doing. If I see a shift in market structure, this is it, a shift in structure on the 5 minute. And I said, okay guys, this is it. If price is going to come back into this area, unicorn entry. Is that not a unicorn entry? Perfect one. So if I am taking the trade, it's going to be right here and my target is going to be here. And aside from that, guys, I did something very, very amazing. It's going to be right above here. But I did something very, very amazing. I decided to activate the, can you see this one? This is the Asian range. You remember your accumulation, manipulation, and distribution. The do we call it the power of 3? Yes, accumulation, AMD, accumulation, manipulation, and distribution. That is the name we normally give it in the markets. So we have price clearing liquidity below. This is the low of Asia, and we have a shifting structure back into a key point or a point of interest here. That is the simple reason why I'm taking the trade on GBP. Nothing else. It's straightforward. If you have been watching me do analysis, you will know that it's straightforward. All right, it's something straightforward. I wanted to check Euro USD. Straightforward, not anything else out of there. All right, it's very, very straightforward, guys. So the reason behind the trade was that exact thing. On GBP USD, I saw this, the same thing, guys. If you check the 15-minute time frame, remember the Killzone strategy? Price sweeping above the high of Asia. Boom. Liquidity has been swept on Euro USD. Don't forget, I also checked Forex Factory. I knew that Euro, if anything should happen to the trade, I knew that Euro is having a high impact news throughout today, all day. And it's German prelim CPI month over month. All right. So that means we're expecting a high impact news. So I decided to go down to the 5-minute time frame. I said, okay, if price is going to trade back, this is going to be the area price will trade into here, into this fair value gap. The maximum price can go to is this bearish order block. So I decided to take it from the fair value gap. For bearish, where is it? Here. From the fair value gap. And my stop loss, of course, is here. All right. And I am targeting the low of Asia. So that's basically what I'm doing. I am in the trade, guys. So anything that will happen, I am watching it. It's either I win or I take a loss in the market. So it's as simple as that. So I'm still watching the trade, guys, and if there is anything wrong, we're going to see it. It's as simple as straightforward as that. I can see GBP playing out. I think GBP is also playing in the same direction with Euro. Okay, it's responding to that. So let's watch it out and see what will happen. I'll continue with the recordings, guys, as soon as price delivers. All right, so let's watch and see. All right, guys, so still on this particular trade, I almost got stopped out, guys. I almost got stopped out, if not because of the tight spread that I have from my broker. I could have gotten stopped out by now. You could imagine price going above the fair value gap even to the order block. And part of my rule actually is mostly I close my charts until now that I just open and saw that price is actually still within my price expectation area. So sometimes you see this in trades, and the truth is that your emotions will be involved and all that stuff. But I try as much as possible to take out my emotion from the markets and then play with the rational sense. So remember I told you that I was going to target the low of Asia because I was above the high of Asia. I have swept liquidity, price have shifted, structure is now back to this area, almost got stopped out. But price is moving in my direction now. All right, price is moving in my direction, and not only me, my community guys are also in this particular trade. So I'm going to watch out for this. As soon as price takes out this low, this one, okay, this one, as soon as price takes out this low, the next low is going to be here. Sorry. The next low is going to be right here, and then ultimately the target, which is right at that point. Let me keep the magnet, or not the lock. This is constant rowing. So I think this is the last point price is supposed to come to. So as soon as price creates this break of structure, I'm gonna move my stop loss to break even. All right, to break even, so that I will be running on zero loss. Guys, I'm happy that I'm still in this particular trade, and I'm gonna watch it out to play. This is something I do almost every day. I am trying to become better every day also, just like every trader is trying to do better in the market. If I get stopped out, it's fine. I'll come back again and take trades maybe tomorrow. But what I want you to learn is how to actually trade like a professional. I'm still in the trade, and I'll be watching out for everything that will be happening, and let's see how it goes. All right, so I will give you every single update that I'm recording here, so that you will also have the knowledge of what I'm doing. So if we check DXY also, we're gonna see DXY is doing the exact opposite of what is happening on Euro USD. You can actually see that the same thing that happened on Euro USD, the exact opposite is happening on DXY. So DXY is right here, is now taking up to the upside. It will target the high of Asia. That is basically where you see this area where the vacuum block is. Vacuum block, or the new day or new week opening gap. So that's important for price. So let's watch it out to play, and as it keeps playing, I will be recording to show you everything I'm doing. Thank you guys for watching. I'll come back and continue. All right, traders, so still on this particular trade, I am still on it. Remember I told you that I'm gonna break even once price closes below this guy, and this is the trade still running. What an absolute trade here. I would have taken another entry right here when I saw price shifted structure here and it came back to this particular fair value gap. I could have scaled in there. Scaling in is basically you opening another position here. If you are opening, let's say you are opening a 2 standard lot here. All right, here you can open 1 standard lot as price is going, so that you can make maximum profit. So now what I will normally do is, once price closes below here, I will now shift my stop loss to break even, so that I will be running on zero loss. All right, but I didn't scale in. I'm just showing you how to scale in when you're trading. So I'm watching it. Guys, when you keep doing this, you become better in trading. All right. You control your emotions. You follow what you're doing. You make your money and you close for tomorrow. So this is how you do this time and again. I'll keep you a record in case I want to finish this recording. I'll just end it and then allow the trade to continue in my direction while I post the video for you guys to learn something from that. All right, so it's running. I so much believe that price is going to trade lower to this area. I just want it to trade lower so that it can hit my take profit of how many pips? That's about 40 pips, guys. Oh, okay, that's 32 pips, not 40 pips. I made a mistake. All right, so that's 32 pips, the last digits here. If you want to learn how to measure pips on TradingView, you can easily do it. Come here. Can you see on this tab? 1, 2, 3, 4. The fifth one. Click on it and come to this thing called price range. If you pick it, this price range, you can just put it here from where to this area. You will see the number of pips. So this is 32 minus 32. So that's 32 pips. All right. So that's basically how to do it. I'm teaching you a lot so that you can become professional also in everything you're doing. So I'll continue with the recording. I think the last one I will do will be the last thing. All right, guys. I think this should be the last part of the recording. I'm almost sleeping because I've been trying to rest, but then this is the trade. I told you that once I have a break of structure, I can break even. It's safer like that. I taught this one on my YouTube channel. If you have not watched the video, how to actually break even, please go and watch it right here. Let me show you how to break even. The video I made, the video not long ago. Break even. This particular video, I showed you how to actually break even professionally. So you can check it out and see for yourself. So this is running, still running, and I'm seeing all indication that price is going to go to that target. All right, so I'm going to be in this trade and then I'll just watch it out and see how it plays out. All right, so thank you very much, guys, and I hope you have learned something. I just hope you've learned something. Thank you for watching. Make sure you subscribe, you share this video. You also let me know if there is anything you want me to do in the comments. Thank you guys for watching. See you in my next video.